Hi everyone. In this video, I'm interviewing Amber Gilsdorf, a college planning consultant with Estrela Consulting. Today, we're talking about financial aid tips for students. Thanks so much for joining, Amber.
Thank you for having me.
So it's important for students to understand everything that's available to them. So to start off, can you explain the different types of financial aid out there?
So before I explain the types, the most important thing to understand is the baseline understanding of the definition of financial aid. So financial aid is defined as any grant, scholarship, loan, or paid employment offered to help a student meet their college expenses. So that's what financial aid is. So you see, financial aid encompasses a lot of different sources of money. And it's usually provided by various organizations. So financial aid can come from federal, state agencies, the colleges themselves, foundations, corporations. And the amount that the student receives is determined by those same agencies' guidelines. So the guidelines issued by them. So now that we have this understanding of what financial aid is, picture an umbrella. We've all seen an umbrella. We know that there's a big canopy. And then under that canopy, in the world of financial aid, there are two categories. Category 1 is merit. Category 2 is need-based. So merit aid is aid that is determined by grades, test scores, your academics, talent, service, athletics, being a legacy student, meaning you had a family that attended that particular university. So merit aid under this umbrella of financial aid is any money that a student gets for being great at something or connected in some way to something. And that is money that we like because it's gift money. You don't have to pay it back. It's free money. The other category is need-based aid. And that is determined based on a family's income, their assets, and the overall picture of a student's family's finances. So under those two categories, there's several different types. So we have the umbrella, we have two categories, and then under the categories are different types of merit and need-based aid. So I said with merit aid earlier, it's money for being great in some way or connected in some way. That money is only scholarships. Merit money is scholarship only. Woohoo! Need-based aid can be a lot of different types. It can come in a lot of forms. It can be a scholarship, a need-based scholarship. It can be a grant. It can be work study. That is when a student is employed by a university and the money they earn in some way contributes to their total cost of attendance. Those three types, need-based scholarships, grants, and work study, aren't paid back. Then there are also need-based loans, and we all know that a loan needs to be paid back. Need-based loans come from one source, the federal government, and then loans in general can come from private lenders. So that is a very long answer to your question, Jackson.
No, great. That was very informative. So how can students maximize the amount of aid that they get? Can you kind of walk us through the process?
Yes, so there is no silver bullet and singular way a family can maximize aid. I feel for families all the time because they've gone through, by the time a student reaches senior year, 13 years if you count kindergarten of schooling, and there should almost be a consolation prize just for making it through, and yet there is not. So the best way, it's not the silver bullet, it's the marathon bullet. The best way to maximize aid comes from the work a student puts in long before their senior year. So we have grades and test scores, and unfortunately, you will never see me on the soapbox of touting testing, but unfortunately, it's the easiest way to maximize aid at schools that offer merit. So again, those are scholarships for being great at something. And in this case, I'm speaking about academics. So that work comes, like I said, long before a student ever gets to their senior year, their grades in high school, and then of course their test scores. So my recommendation for families to maximize merit aid is to apply to at least 2 to 3 schools where the students' grades and test scores are in the top 25% of admitted students. So how you find that is most schools will publish their middle 50% of average incoming students' GPA and test scores. So if I have a 30 on the ACT and I apply to a school where I'm seeing the middle 55% of students who are admitted are earning a 25 to 28 ACT score, my 30 automatically puts me in that top 25%, which makes me a strong candidate for top merit scholarships at that school. So for higher grades, students need to develop strong academic skills. I'm not talking about being good at reading, writing, and arithmetic. I'm saying time management, organization, asking for help. These are the soft skills, the academic skills for getting higher grades. For higher test scores, and again, I will never be on the platform of advocating for testing. However, it is the current world in which we exist. Maybe COVID will change that a little bit. But for higher test scores, I recommend an intentional testing plan with test prep beginning long before a student ever takes their ACT or SAT for the first time. So for most students, that means taking the PSAT as sophomores, completing a pre-ACT if their school offers it, which is essentially a PSAT, but a pre-ACT. They can purchase prep books and complete full-length practice tests. They're also available for free for download on College Board's website, which is the SAT, or on actstudent.org for ACT. And then compare. So a student should take a practice SAT and a practice ACT. Compare the scores on the practice test to determine which test is the student's stronger test. And then put in a concerted 12 to 15 hours of diligent study leading up to the first testing session. Seeking help from teachers in that designated subject area if a student is struggling with a particular type of question. So what a family should do is look at the test dates for this upcoming year, select the first one that fits the student's timeline, and then work backwards from there to determine how they're going to get those 12 to 15 hours of prep leading up to that date. The other recommendation to maximize test scores would be for SAT, there are 2 times a year that SAT, I believe it's 2, I don't want to misspeak, I think it's 2, where they offer a question and answer service that a student can order a test and their answers after the fact and then study from what they got wrong to improve their scores. And ACT has something similar called the test information release. When a student checks out after they've registered for the test, when they go to finish their registration, they'll be asked if they want to order their test questions and the answers after the fact. And I always recommend that to help with studying. So that is the marathon silver bullet. It is not the quick fix. Other ways that are much more manageable, that aren't as long-term, is that the number one thing a family should understand is it all boils down to the list that a student has of where they're going to apply. So things that are outside of the student's control are harder to, of course, account for. But picking where a student's going to apply is in their control. So a family needs to understand that the bulk of the money a student will receive to attend college will come from the college itself. There's no magic tree or magic fairy that will swing in and give extra money. It's got to come from the school. That is the largest funding source for a student's financial aid. So especially for non-loan aid. So institutional aid in the form of university scholarships and grants. So every family, when they're putting together a student's application list, should know what each school's policy is around financial aid. Does that school provide merit scholarships? Do they provide need-based aid? What kind of family is the student coming from? For example, at a school like Northwestern in Evanston, Illinois, they are a need-based aid institution only. So if I've worked my tail off all the way through high school, I've got a perfect 4.0 and a 36 ACT, and my family is in a high enough income bracket where I won't qualify for any need-based aid, I'm certainly not going to get a merit scholarship at Northwestern. So understanding what a school's financial policy is before that school ever is applied to is a way to maximize aid. So how do you find that information? My favorite source is a site called collegedata.com. You have to make an account. It's free, but you have to make an account. So, yay, usernames and passwords. But in that account, you can look up a school, and then there's a tab called Money Matters. And when you click on that tab, you can see all kinds of data compiled about an institution. You can see what percentage of students receive merit scholarships, what percentage receive non-loan need-based aid. So those are usually called institutional grants or institutional scholarships. So that's the information I'm looking for when I'm putting together a list for students. So that's my kind of number one thing. Know the financial policies at each school before you apply. And then be sure you have schools on that list that you're going to be a candidate for their institutional policies. So the other things families can do, they can complete and submit the FAFSA, and I'll talk a little more about that, and the CSS profile if their schools require it. These are the two applications for need-based aid. Complete them as early as possible. The reason for this, if you think about a pot of gold and we start at the same starting line and we race toward it, whoever gets there first is going to have a chance at getting more money. So that's why it's really important to file these applications as soon as possible and by the deadline at the latest. So every school accepts the FAFSA. This stands for Free Application for Federal Student Aid. So it is free, and it accounts for a family's income and their assets at the time of filing, as well as the student's income if they have a part-time job and any assets the student has. So this application gives the college a snapshot of a family's financial situation. And from that, the FAFSA determines something called the EFC, the expected family contribution. This is what family will be expected to pay. Let's say my EFC is $20,000 and I apply to a school that is $28,000 in total cost of attendance, a school that's $50,000 in total cost of attendance. My EFC is the same at all of the schools, what I'm expected to pay. Now, I might not be able to afford to pay $20,000, and I certainly might be applying to a school that doesn't make up the difference. But the FAFSA must be on file as soon as possible. The profile, I'm not going to get into a ton because that's only for much more selective schools. Usually there's about 400 institutions that require the profile. But it is a much more intensive review of a family's finances, and it takes into account if a family owns a family-owned business, if they have other very specific and detailed information. Okay, so that's the next thing. And of course, deadlines, deadlines, deadlines. These forms and applications must be in by the deadline to ensure that a student has a shot at any need-based aid. The next thing, now we're getting into like more fringe options. Every state has money set aside to support college-going students from that state. The association that has all the information you can find your state specifically is NASFA, or just NASFAA.org. And they will have information on state financial aid programs. Every state education agency usually has at least one grant or scholarship available to residents. And these will be very specific things. Like in Ohio, where I'm at, we have the Ohio College Opportunity Grant. We have the Ohio War Orphans and Severely Disabled Veterans Children's Scholarship. So you can see how very specific and niche some of them are. We have a nurse education assistance program. It's a loan program, but again, very specific sometimes to field or area that maybe a parent was involved with. So again, those are other more fringe options. The other fringe suggestion that I don't advocate for unless a family is working with a financial planner is to minimize the amount of money sitting in cash reserves at the time they file the FAFSA, because assets are, of course, a percentage of that calculation. I've worked with families where they may have 100,000, 200,000 sitting in cash reserves that's not really itemized to go anywhere. And when a family can minimize that amount, it may make a difference in the EFC. It also may not, depending on the income bracket. So that's why I say that one I always put a little caveat, like use with caution and work with a financial planner before making any decisions about what to do with that one.
So once students get their financial aid letters back with their acceptance letters, they have to compare and contrast their options. So analyzing these financial aid packages can be kind of confusing. So do you have any tips to kind of help them analyze and compare their financial aid packages?
First and foremost, the biggest one, don't be afraid to ask questions. Every college has a financial aid office with financial aid counselors whose job it is specifically and exclusively to answer your questions. So if anything is confusing, maybe the whole thing is confusing, do not be shy, do not be embarrassed. Please call that office, make an appointment over Zoom to sit down with a financial aid officer and have them walk you through it item by item and line by line. This is probably one of the biggest investments next to maybe buying a house that a family will make, and you can't afford to let pride or embarrassment block that. So please ask those questions, and it'll be educational too. And again, these counselors, that's their job. So you have every right to ask questions and set up those meetings. So that's my first recommendation. Second, for a family that maybe understands what they're reading, but they want to compare and analyze, as you said, Jackson, there's a couple tools that are my go-tos. They each have their pros and cons, but they at least will help a family get a snapshot or a ballpark of what schools are offering packages that are better for that student. So Big Future by College Board, they have a Compare Your Aid Awards calculator. Most students will have a College Board account if they've taken the PSAT or the SAT. So if a student has a College Board account, they can log in and then they can save their work as they work through the calculator. And you can actually compare up to 4 schools at a time. And it walks you through plugging in all the different types of financial aid included in that award letter. So you can put in the name of the maybe scholarship or the loan, the amount, the interest rate. You can plug all of that in to get a really itemized breakdown of what out-of-pocket total a family would be paying, how much they would have to pay back, and then really getting a more comprehensive picture. The downside is I don't think the College Board account goes into the level of like super specificity that my type A personality really appreciates, but it's a good snapshot. The other one that I've directed families to is the Consumer Financial Protection Bureau, of all places. They have a tool called Your Financial Path to Graduation. And this tool has the super specificity that the College Board lacks, but it's only one school at a time. So you'd have to do a school, kind of print out your information, and then go back and do another. So I guess you can't have it all together. But this tool also has a built-in budget. So then you're looking at, for a student when they graduate, if you take out, let's say, $30,000 in loans, then you can actually build in a budget and see like how that repayment plan will work in a budget for when you graduate. And it has a countdown, I like countdowns, on the right-hand sidebar that helps the student understand how much they still need to fund that hasn't been covered by financial aid. So yeah, those are my two go-to things after talking with the financial aid counselors at every school. So I said every school. So if you have 4 letters you're trying to compare, that's 4 meetings with 4 different financial aid counselors. But again, that's their job.
Great. So, well, first off, in which situations would you advise students to appeal their aid offers? And do you have any tips to help them do that?
So I think it's really important for a student to understand, like, I don't think you should appeal every offer ever. I think it's really important to appeal when there's been a loss of income from, or a change in income from a job loss, death, medical bills, etc. So anytime there's been a change. The fatal flaw of the FAFSA specifically is that it's based on income information from something called the prior tax year. So for our dear seniors right now going through this, families are using their 2019 tax information. 2019 is from before the world turned upside down. So there's been a lot of families whose tax information in 2019 is not reflective of their current financial situation. So I recommend for families who know in advance already that they will fall into this category of change in income or medical bills or what have you. If you know that's you, be proactive. Your student has their list of schools. It's okay to contact the financial aid offices in advance. So let's say you file the FAFSA following the rules using that 2019 information. The minute you hit submit on that FAFSA, start calling or emailing the financial aid offices at every single school to which your student is applying. Because what they can do, and again, they are there to help, they will solicit more information from you. And most likely that information is going to require proof that there's been a change in income. So there will be paperwork to be filed, copious amounts. But the sooner you start that process with them, the better, because you can imagine many families won't start that process right away. And then these offices are going to be inundated come springtime when financial aid letters go out. And if you can get ahead of it, your financial aid letter can already be adjusted. Like the financial aid package can already be adjusted to include the change in income well in advance of the financial aid package ever going out to the family. So be proactive, have lots of paperwork and proof. And then if you're mid-year, so let's say you're cruising along and then something comes up and blindsides you and something changes, same rules apply. Get on the contacting process ASAP and be ready to submit all requested paperwork. I have been down this path many times with families. Colleges are always willing to try to help a family. They may not always be able to help a family. And then in appealing the award, if you haven't had anything significant that applies to what I just said, but you still feel like, wow, for this to work in our budget, like this would be a huge stretch for us to try to make this work. I recommend that families do wait until April or May to request reconsideration of their financial aid. And the reason for that is college financial aid offices are scrambling through the winter and spring to assist families who fall into the previous category. Major change of income, job loss, medical, all of that. So they're going to be hesitant to work with a family that doesn't have the ability to provide proof that they need any more. They're not going to put you at the front of the line. That doesn't mean they're not going to help, but they're waiting to see how they can manage the other situations. So for families who really just feel like it's a stretch, wait until April or May, compose an email to the financial aid office. Usually if you have some kind of counter offer, so for students who maybe have 2 small private liberal arts schools with drastically different financial aid awards, I'm talking by like 3,000 to 5,000 or more, that's when it's appropriate to make an appeal. Be kind, don't be demanding, and just say, when you have a chance, I would like you to reconsider this, and this is okay for parents to tackle. Oftentimes parents are dealing in the financials and obviously are the ones who are funding this process. A student does not need to be the one dealing with financial aid offices. If they're comfortable doing that, great, but they don't have to be that person. So the parent managing the process for their student when it comes to this is appropriate. And then having that other financial aid award from another school and saying, here's what, I'll use Denison just because I'm near Columbus and Denison is near here. Here's what Denison was able to provide. I'm also looking at Kenyon, they're also near here. Is there a chance that you could match this? And again, don't go in with expectations that it will work out. At most, maybe a couple $1,000s. Don't expect, here's 20,000 more, but maybe a few thousand is possible. So prepare for nothing, and then you might be pleasantly surprised.
Okay, great. So finally, in which situations should students apply for private loans? And do you have any advice as to how to select the best private loans?
Sure. So as a general rule, students should only consider obtaining a private education loan if they have maxed out the federal loans. Federal loans are much lower interest rates. They have fixed interest rates. They have lower fees and costs over time. And they have usually better and more flexible repayment plans. So federal first, everything else second is how I try to make a mnemonic device for families. So only then do you look at private loans to make up any difference. And then students should compare costs with the federal plus loan. So the federal government also provides an additional loan. So the ones I talked about before are the Stafford loans. Those are the low fixed interest rates, great repayment terms. But then the federal government offers something called the plus loan as well. So any private loan a family is considering should be compared against the federal plus loan. So the plus loan is much less expensive and also can have better repayment terms than private loans. And a quick plug, I love this website, finaid.org. They are the federally run website for financial aid, finaid.org, and they have, a glossary of all of these terms. They break down all this information, and they have a ton of calculators on there to compare loans, private loans and federal loans. So definitely use that website if you're in this category of shopping for loans. So as I said, federal student loans, always want to go with that first. Private loans can have fixed or variable interest rates and can also come with higher origination fees and other fees. And sometimes, this is crazy, there can even be fees for paying your loan off early. Yeah, the whole system, so frustrating. So only when there is a gap. So like I said, a student should only apply for private loans after they've maxed out the federal loans. Only when there is a gap between what a family has saved for college, so maybe they have a 529 or another kind of savings vehicle. So if there's a gap between those savings, what scholarships the student has received, work study, federal loans, and then the monthly cash flow that a family can contribute to the student. So a quick side note on this, if you think about it, a family pays to have a student live under their roof. They're paying for the electric that student uses, the water, the gas, the food they eat. Maybe when a student's in high school, you're paying for maybe music lessons or club sports or things like that. All of those costs are going to be gone when that student leaves for college for 9 months out of the year. So that money that a family has been spending can also be turned into monthly cash flow toward college as well. And for most families, on average, that's around $300 per child. Okay, so only when, after all of that, there is a gap in the total cost of attendance. So for example, let's say a school costs $30,000, we'll use that as a round number, and all of this money that I just referenced adds up to $22,000 a year. A family needs to come up with the missing $8,000. So that's when we start looking at the private loans. The total amount that a student borrows in all loans over 4 years should not exceed the total amount they would make in their average first year starting salary. This is my rule of thumb. So we stick to that rule of thumb because the monthly repayment is about $100 a month for every 1,000 borrowed. So if a student borrowed $38,000 total to pay for 4 years of education to fill those gaps, their repayment per month would be $380. All right, that was a lot of numbers. So that's the rule of thumb. That's the overarching guideline when you're looking at the total amount of loans accrued over 4 years, combined federal or private. What's that going to amount to? It should not exceed that average first year expected salary. If your student doesn't know what they want to do, pick 4 or 5 fields that they're considering and figure out what the average salaries of those are and then average that. So private student loans, their fees vary by lender. So when taking out a private student loan, keep an eye on the origination and application fees, as well as penalties for paying that loan off early. Private loan lenders will usually allow for a family to get pre-qualified online before you fill out an application. So this can help you figure out how much you might be able to borrow, what your interest rate could be. This is very similar to like applying for a mortgage, right? You got to get pre-qualified and you get a general idea, a ballpark of what your interest rate would be. Like I said before, you want to exhaust all other options first. And then when you are ready to pursue a private loan, compare the fees and interest rates of multiple lenders before making a decision. Do not take the first one that you research. This is, once again, such a big investment that you owe it to yourself and to your future, or if you're the parent, your child's future, to find the lowest interest rate that you can with the best terms. So money.com has a great article. It was published this summer about the best student loans of 2020. And then finaid.org, that site I mentioned earlier, they also have a lot of information about private loans and details about what to watch out for when comparing rates, as well as calculators to figure out which loan is the better loan. So shopping for rates, comparing, and making an informed decision are the best ways to go about pursuing the private loan, but borrow as little as humanly possible on the private side.
Great. Well, thanks again, Amber, for joining us today.
Yeah, it's been my pleasure. Thank you for having me.
If you like this video, please give it a thumbs up. And for more interviews like this, please subscribe. Have a great day, everyone.